Hello and welcome to First Place TV. My name is Tumelo Makgakga. I am a qualified chartered accountant, a registered tax practitioner, and a registered auditor. Today's topic or today's question comes from our frequently asked questions. We normally get this question from business owners, people who are working full-time in their businesses, and they would ask us to say, our business is tax compliant, we pay tax in our business, and on a yearly basis, we're able to get a tax clearance certificate and do business, apply for tenders, etc. in the business. Now, in addition to the taxes that we are already paying in the business, are we as directors or as people working full-time in our businesses, or maybe even still having other things happening on the side, do we still have to do or do we still have to pay tax in addition to what the business is already paying? And I thought to do this video because maybe one or two more people can get some direction in terms of what they need to be thinking about in order to address these kind of questions that may come up. I want to address this question in two parts and looking at two specific scenarios. The first scenario being a person who's operating their business as a registered company with a CIPC, whether it's a public company or a private company, or even a closed corporation that is registered with the CIPC. So that person has that structure. They are working in the business. They work full-time in the business, or maybe not even full-time in the business, but they have a structure which is a company which is registered with a CIPC. And you're wondering, the company is paying tax. Do I still have to pay tax? We're going to talk about that as a first scenario. And the second scenario that we're going to deal with is a person who has not necessarily registered a company. They are running their business under their own name. All right. So in the first scenario where you have registered a company with a CIPC, in terms of South African law, a company is called a juristic person. It is seen as a separate legal entity. And that is to say that it has a registration number that is unique. It has a tax number that is unique. And depending on whether or not it is registered for other taxes, it will have a unique tax number for each and every tax, right? And that is to say that South African law sees a company, private, public, cross corporation. It is seen as a separate legal entity from its directors, from its shareholders. So those two are seen as two different people. And you as an individual who is a director in the business, you have your own ID number, you have your own tax number. So the law also sees you as a separate legal entity. That is to say that a company is here, you are here on this side. So the two are seen as two different legal entities. What that translates to is to say that the fact that the company taxes are in order does not necessarily mean that your personal taxes are in order. That is in the first scenario. So then that means that as much as you take care of your company taxes, then go on ahead and take care of your own personal taxes, because the rules and the laws that apply for a company in terms of Income Tax Act and tax laws in South Africa are different to the tax laws that apply to individuals. So every year you need to do your own personal taxes, and you need to make sure that you are tax compliant as an individual, in addition to your company that is also supposed to be tax compliant. So that addresses the first scenario. Now let's look into the second scenario. This is a person who has not necessarily registered a company. They have not necessarily registered a closed corporation. So they are operating their business as themselves. So you are using your own name to make sales. When you make sales in your business, every sale comes in through your personal bank account. When you make purchases, you purchase through your personal bank account. You're operating as yourself. You don't have a company. There's nothing of the sort in terms of, a separation between you and your business. Everything is happening in one place. In that scenario, you are seen as one person. You are as a legal entity as yourself. You have an ID number, you have a tax number. So by virtue of you not operating under a company that is registered, you have then opted to operate as yourself, which then means that your tax affairs must be done in consolidation. What that means is your income tax must include all the income that came through in respect of the sales that you've made in the business, all the income that you've made from your employment if you're employed, all the sales or any money that you've made elsewhere as yourself. All of that has to be taken into account when you do your annual taxes. Now, what is the best way to go about this? What is the best way to structure your business and your personal affairs? Well, firstly, one of the best recommendations, or one recommendation that will stand out here, is that separate your personal affairs to your business affairs. Make sure that there's a separation between what's happening in your business and what is happening in your personal life. That is to say, if you're working full-time in your business, work with someone who can assist you to separate between the two, because there can be significant implications going forward, especially if you are running your business and you want to build this business, you want to grow this business, and eventually one day you want to maybe sell some shares and do some great things. Work with someone who can assist you with separating the two. One of the biggest benefits of managing on or separating yourself from your business is that you are able to see how your business is performing on a periodical basis, whether monthly, quarterly, yearly, right? But now, if your personal affairs and your business affairs are all in one place, it's very hard to see how each one is doing. The best way to go about it is, if you're working full-time in the business, try and draw a salary of the month, take it to your personal bank account, have your personal affairs go off on your personal bank account, and have the business affairs go off on the business bank account. That way you are able to do your taxes on a personal capacity, and you're able to do the business taxes properly. Now, that's obviously one of the biggest, or one of the most recommended approach that you can go about. Please do reach out to our team if you need further assistance in this kind of scenario, or if you've got further questions. I hope that you derived some sort of value out of this video. Thank you so much for tuning in, and I'll see you in the next video. Thank you so much. Cheers.